Hello and welcome to Commercial Real Estate Secrets. I'm your host, Austin here. Today, we're doing a market update, recapping what's been happening in the commercial real estate market over the past several months and trying to give you the best insight and information on how to make informed decisions moving forward. So, it's been over a year since the pandemic struck, and a lot of people are sitting on one of two categories. Either A, you think that we are in for a recession, you think that it's the global economy, the U.S. economy has been propped up, or B, you think that we are past the dust, it's settled, and we're in for a bright future. And so I'm just here to shed what I've been seeing in the marketplace and give my opinion on what's going to happen moving forward. And full disclosure, I could be completely 100% wrong. There are so many factors, so many unpredictabilities that could happen that all we're trying to do is make the most informed decision we have with the data that's available to us at our fingertips, right? And so here at Leaders Real Estate, first of all, there's been a lot of talk about commercial real estate because what happens when you have a pandemic or a crisis or a recession or anything like that is the first thing that goes is the stock market. That falls really quickly because the stock market is generally a leading indicator. It's a future prediction of earnings. That's followed by the residential housing market, and third, sometimes close to the last thing to get hit, is the commercial real estate market. And that's because it takes a long time for this to settle in businesses, for businesses to try and make their way through the storm. They go through all their cash reserves as long as possible before they finally end up closing the doors or whatever it is that they have to do that would give more vacancy in the commercial real estate space. And so we have had a significant amount of time at this stage to kind of see where the dust has settled. And so far from where it looks like to us is that we're not going to see that big of a correction, if any, in the commercial real estate space. And so if you look at this from a broader perspective, what's going on, right? There's several things. Well, first of all, this was never a financial crisis, right? This was not made by bad policies. I mean, this was a health pandemic, and the financials were, for all intents and purposes, pretty healthy, but pre-COVID, pre-pandemic. And so you had a lot of pent-up demand when everything was locked down, right? Now, some industries, some businesses, some sectors were adversely affected for sure. But outside of entertainment, hospitality, travel, going out to eat, health, fitness, largely a lot of these industries were unaffected. And not only that, they had some of their record years. So what's happening is you are seeing an increased demand for space as a result of COVID. Now, it's a little bit, it makes sense in hindsight, but at the time it was counterintuitive. And so a lot of people were thinking, okay, businesses, people aren't going to go anywhere anymore. They're not going to want to they're going to do all online shopping, all retail. All retail will essentially cease to exist, and there's going to be a huge lack of demand, and we're going to see these buildings closing up or going into foreclosure or whatever it is. And so in reality, what happened was quite different. So first of all, the first thing that was hard to predict was that e-commerce actually takes up more square footage. Okay, and it's not commonsensical when you think about it, but the fact is that there's more supply chains to get anything, whatever it is, from the manufacturer to the consumer, right? And so when you are direct shipping those, when you're drop shipping those, you're actually increasing the square footage requirement from a real estate standpoint. And so what's happening is that you're seeing, these low grade, we'll say D-level retail spaces that are becoming less desirable getting acquired or used for warehousing and industrial. So what happened is the price of warehousing and industrial rose a lot. Retail did not rise. It declined in some places, but it plateaued in a lot of places. And in some certain areas, it's increased, right? And so that's because, you're always going to have demand for top grade retail. A grade retail, the best of the best locations, you will always have a demand for the best of the best, right? That's a universal truth. Okay, so what happens is when anything goes available in your A grade markets, your A grade retail markets, well, anybody that's looking for a good spot, maybe they're in a B grade location or they're looking to upgrade, they're gonna come take that vacancy real quick, right? And then people who are in the C grade retail, they're gonna move up to B grade retail, and really the owners of that D grade retail were the ones stuck holding the bag in this case a lot of times. And so what happened was where previously retail was so expensive that industrial and manufacturing and warehousing, they all kind of went in these non-prominent areas. Well, that has increased so much that it's actually more economic for them to come in and grab these unoccupied degrade retail spaces now. Sometimes entire shopping malls are getting purchased for warehousing and industrials, right? And so that was just something that's hard to predict. Now, another thing that you wouldn't necessarily think about at first is the fact that with something like a pandemic, it actually increases the desire for space in and of itself in a retail situation. And so, like, take a company, for instance, like Lululemon as an example, okay? They are looking to switch some of their stores to be fully self-sufficient units that don't have any neighbor tenants that aren't part of these malls, right? And so when you move from a shopping mall or an outlet mall or something like that, where you got a lot of anchor tenants in a congested area, you're actually increasing the overall demand for land and square footage, because now you want to have people to park there. And what they're doing is they're incorporating a lot of the drive-through element. So you can have somebody get on their phone, make an order, drive through and pick that up, right? Or you could even have them return an order, drive through and drop that off. Of course, there's still going to be that in-store experience, because a lot of people like to just simply go out. They enjoy doing these things. They like trying on the clothes. And so if I don't see that ever changing, if it does, I mean, that is a very, very, very long ways off, right? We're talking multi-decades. So in the near term and in the midterm and even in the long term, you're going to see good pricing for commercial real estate, in our opinion. And it creates, it just creates a little bit of a dichotomy in the market. The other thing that is a little bit ironic is inflation. And so we are obviously in an inflationary market. We've printed 30 to 35% of the entire US money supply that's ever been printed has been printed in the last really 12 months, 12 to 14 months, right? So that's a huge number. You're already seeing inflation make its way through in asset classes. People who have assets are disproportionately affected than people who earn wages. So when you create an inflationary environment by printing money, having things like stimulus checks, unemployment, government packages, what happens is the value of assets goes up on paper, because now there's more money competing for those returns. There just is. And the wage earners are the ones who are actually the most adversely affected. And so and that is also ironic. But what you're seeing is the asset prices go up, right? So you've got commercial real estate, you've got regular real estate, you've got the stock market assets, owning equities and individual shares and stuff like that. Those are all going up because there's so much money, there's so much cash on the sidelines looking for returns. And people who have had assets have seen significant increases to their net worth on paper, while simultaneously the purchasing power of the dollar has gone down. And so what I mean when I say that it's ironic is investors are willing to pay more money right now for commercial real estate buildings in terms of cap rates. So they'll pay lower cap rates, right? Which means that you're paying more for the building. So where previously we might have seen buildings go for 6 or 7% cap rates, those are going for 5.5% cap rates. And that makes sense, right? Because it's like, yes, I'm willing to pay more now for an asset, because if we're in an inflationary market, that is going to increase in value over time. And that's true. However, what I mean when I say that it's ironic is the fact that those buildings are tied to the value of the leases, and the leases are not inflation proof for the most part, because they have built-in increments, right? Like they are very good at calculating for historical inflationary periods, and that's why you might see a 2%, 3% year-over-year increase on commercial leases, or you might even see a 10% increase after 5 years, like every 5 years. And so what's happening though is that those are already baked in. And if those continue at 2%, 3% a year, they're going to be underperforming the rate of inflation theoretically. Like, obviously, we don't know the actual rates of inflation moving forward. We can only speculate. But assuming that we're going to see increase in inflation rates than we have historically, that means that the 2 to 3% rent increases will underperform those inflationary numbers, but you still have people paying higher prices for those assets. And so that's where it kind of comes to a bit of a crux. But all that being said, we personally we are obviously biased here at Leaders Real Estate, but we think that it is a good investment to continue to invest in real estate. I mean, whether that's commercial or whether that is residential or even investing in the stock market, because what you have is a lack of supply. I mean, since 2008, builders have stopped really building at the same rate that they were prior to that, and there has been a huge lack of supply. And for a while, the demand was pretty low, right? But what happened is the demand has much outpaced the supply in terms of real estate. And so we're already going to be a little bit behind. And then when the pandemic happened, people left apartments and downtown scenes in droves and wanted to buy their own places, their own houses, have their own real estate, and with a lot of space, right? Like they wanted to get away. They don't want to be packed in. They wanted to have their own space, their own backyards, be free to breathe fresh air, and that what happens is it drives the prices up like crazy. And so some people might say that we're in a bubble right now, but the reason we don't believe that we're in a bubble is because this demand is not going anywhere. You're having bidding wars. People are paying over asking price for houses, for buildings, for whatever it is. You list it, and it's getting snatched up like that. But it's because there is so much demand. There is a huge amount of demand, and in our opinion, we don't see that demand falling. We don't see that diminishing anytime soon. And so to wrap it all up, the stock market obviously plays into that too, and we've seen phenomenal earnings. I mean, really, COVID created the opportunity of a lifetime. If you were optimistic, if you were bullish, if you're willing to take some risks, I mean, you could have gotten the companies for deals that you may never see again in your lifetime. Some people took advantage of that, some people didn't, but what we're seeing is the market continue to go up, continue to go up and to the right, and it's going to be volatile, obviously, it always is, but we think that fundamentally there's enough sound infrastructure, there's enough soundness to continue to have a bullish case for the market. The other thing that's actually that we consider good news, and I'm just regurgitating what I've heard Kathy Wood say over at ARK Invest, is that people are saying that we're in a bubble, right? People are worried that we're in a bubble, and that's actually a good thing because it means people are exercising caution. Whenever you think that there is no bubble, whenever you think that all you can do, if everybody's in consensus that we can only go up from here, that's when you need to be really, really worried, right? When there is blood in the streets, that's when it's the time to invest, right? Be fearful when others are greedy, and greedy when others are fearful. And so you don't want everybody to be greedy right now. You want there to be a caution of pessimism to go along with that optimism. So to wrap it all up, long story short, we think that it is a good time to invest. Expensive, yes. Pricey, yes. But the value is there. We believe it's going to continue to go up. It's not going to get any cheaper. And so if you just sit on the sidelines and wait for an opportunity, I mean, you could be waiting a long time. I've known people that have been calling for a recession since 2015 and 2016, and they've had cash on the sidelines, right? Robert Kiyosaki from Rich Dad Poor Dad. He's been calling for a recession since 2015. And if you waited with cash on the sidelines, I mean, you would have missed out on a huge return. I mean, you know what I mean? And even though we had the pandemic, we had a 35% correction, you still would be up if you invested on the worst day of 2020. And so we personally don't believe that it's the right time to sit on the sidelines, especially in an inflationary market where your cash is going to have less purchasing power. We believe that you might have to pay higher than you would be used to normally, than you would be accustomed to for typical assets, and especially in commercial real estate. But long term, it's going to pan out because the value is only going to keep increasing and keep going up. And so, we're not scared. We're not living in fear. We are optimistic and hopeful about the future. And there's always going to be a demand for good spaces. And so, keep looking, keep trying to find those spots, keep trying to find opportunities, whether it's for purchasing for an investment or you're just looking for the best location for your business. The prices aren't gonna get any cheaper. And so hope this was helpful. Hope this can help you make informed decisions as you move forward. Again, this is all just strictly my opinion. No actual financial. I'm not giving you any actual financial advice. This is just what I'm doing and what we see here. So I hope you guys have a great day. As always, if you like the content, let me know. If you hated the content, let me know. We're always looking to improve and get better. So please reach out, and we'll talk to you guys soon.